Good morning. How you doing? You okay?
Yeah, not too bad. Thank you very much. How are you?
Um, Pretty bright and breezy to be fair. Bit done with fitness, got coffee, taking the dog for a walk. But it's a big day for you.
It's a big day for me actually. It's a bit of a weird one actually because I just went and had my last supper. Sounds quite morbid. I don't mean that to sound morbid, but
You on death row?
no, no. As in like later this afternoon I've got surgery to repair my medial meniscus when I tore it playing football, and it's quite a weird thing really. It's quite matter of fact. So people asking me about how's it going? I'm in surgery later today. It's just such a strange thing to say. It's like you pop into the shop. Yeah, going to the pub.
Well,
Having surgery before though.
well look, from the bottom of my heart, hope the surgery goes well.
I appreciate that. Thank you.
Hopefully it all goes smoothly. But today, obviously, we're going to be talking about something a little bit different
Yeah,
to surgery.
absolutely.
Talking about alternative investments. Now, something which we've dabbled in quite a bit over the last couple of years, and I'll be brutally honest with you, is that I was quite green, quite wet behind the ears with all this stuff. I'm not
Me
a
too.
casino lover. Well, I like the casino, but I don't like to spend money. I don't like gambling. I'm not really into sort of betting and all that stuff. So, traditional person that kind of likes the steady things that make sense and not risking stuff, asset-backed things. So, when you pretty much introduced me to all of this malarkey,
I'm quite risky.
well, the thing is, looking at you, you look quite innocent, but actually,
It's always the quiet ones.
you're a loose cannon.
Do you know what? It's quite funny really because so I've got two older brothers, and I've very much been raised as not a boy. I don't mean it in that way, but obviously, like boys, when you raise them, are quite hustle and bustle, aren't they? Really, I was never a girly girl. I always wanted to do what they were doing, play the sport they were doing. But one thing that is quite prevalent in my family is everybody likes to like gamble. And I don't mean like people have got gambling addictions. I don't mean that in any sense. It's just like my granddad and my dad, for instance, like horses, like used to follow them. My older brothers like football accumulators, and my auntie and uncle go to Las Vegas like once or twice a year to play like 3-card poker. My other uncle was a professional poker player. So to be honest with you, I've been raised with it. And I'm not condoning gambling here or anything like that. And not that anybody's got a problem. Let me just make that completely abundantly clear. But like, like some people will go and, I don't know, buy a new coat and spend £60 on a new coat. Me or my family may spend, a tenner on an accumulator instead in terms of that side of things. So
it's probably the moment to say, if you're watching this, we are not condoning gambling.
No,
and we're not giving away financial advice.
No, we're not.
So please do your own due diligence.
Yes, absolutely,
right.
Absolutely.
But your family, lovely as they are all lovers of getting involved in
like a tip,
stuff like
sort
of...
Let me tell you, right? If a tip of a horse comes in from anyone from around our family, it goes through the family group like wildfire. It does. Everyone loves a horse.
But to be honest, my family is the absolute opposite. My dad, my mum, they would never ever even dream of going to the betting shop, putting a bet on, even on the Grand National or anything like that, that probably historically somebody would have done back in the 70s or 80s and that stuff.
Yeah.
Actually, they wouldn't do anything really like that. They wouldn't go to the casino and spend any money. They would literally be the penny pinchers that would keep all of the coffers.
No.
Coffers, yeah.
So
close to themselves.
Let me tell you this. I remember being a kid, and I mean like young, and Grand National Day, Saturday, my dad would come home with the Sun newspaper or the Racing Post, and you open the middle section of the paper out and all the horses names on there, and we'd each pick a horse, and we'd get the dog to walk over the paper, and the first
what?
Wait for it. The first horse that he put his paw on, that's the horse that we put a bet on. £2 each. Everyone would have £2.
So wait a minute, you asked a dog to walk over the paper how many times?
Just once. All he needs to do it was once. First paw.
Oh, I thought it meant for everybody.
No,
so every individual would have
no. Okay. His first paw, he put down. He'd be like, right, yeah. There's Wolfgang was his name at the time. That would be his horse. And one of the funniest memories I've got is my older brother Ollie. He must have been about maybe 15, 16. And Wolfgang and his horse were running neck to neck down the finish line. And he was absolutely fuming. He got beaten by Wolfgang's horse.
Oh, no.
But yeah, no, going back to what you said, I definitely have more of a risky kind of like way of thinking about things. Absolutely. But I think you need two sides of it, right? Because sometimes, I've lost a lot more money than you have on investments, particularly crypto stuff. And sometimes I need you as the kind of person to go, all right.
The person on the jockey on the horse that's pulling you back.
Yeah, just going, looks really good. Let's just analyse it a little bit more because I'm quite, this looks really good. Should we do it now? Type of thing. Whereas you're like, it does look really good. Let's sleep on it. And then by the morning, if we both like it, we invest. And if we don't, then we don't. But, yeah.
Well, hopefully it's a little bit more due diligence than just a sleep.
Well, yeah.
But,
yeah.
But no, I get what you mean. Look, I think at the end of the day, you come from a different families and backgrounds, and I think that openness and to different types of investments pretty much
absolutely
sums you up in terms of you're open to everything.
Yeah.
Whereas I was a very closed book, and over the last 2 years, I've become more open to different things, which actually, as much as you can win as much as you can lose, it kind of opens up more avenues and more people that you can meet. So it's brought into our world a lot of people that we never would have even met.
Yeah.
Just because of these things that we've done. So why don't we go straight into the first one, which is probably one which maybe a lot of people are more familiar with, so stocks and shares.
Okay, yeah.
So have you invested in stocks and shares yourself? What have you done?
Yeah, quite a while ago, before lockdown, or maybe at the start of lockdown. So to give you a bit background about this, obviously lockdown came. We as a business were still, sourcing. The service accommodation business kind of went boom because obviously people needed, separate addresses and things. So business was pretty good for us during the first kind of like year of lockdown, ironically. But I had a lot of time on my hands. More than I probably did beforehand, and I started kind of looking into stocks and shares and trading, and it opened me up to a whole different world of things that I just never really understood. So I started invested in small stocks. BlackBerry was one of them. I invested in a food company as well.
BlackBerry, the mobile.
Yeah.
Devices.
Yeah. Okay. So what BlackBerry did is obviously iPhone completely killed them as a market, right? Yeah. So what they did is there was something like 90% of their business was hardware based. So what they did is they turned 90% of their business into software. So it's obviously a commodity that they could sell, and they became or are still trying to become. Basically, they wanted to become a software giant. So their shares were something like 9 pence or 18 pence. So I thought, well, I'll invest a couple of £100, see what it's like. But it's been okay. It hasn't really set the world alight. Can't really say that it's been amazing. One thing that I kind of quickly learned with my I guess original dabbling with stocks and shares is that it's a long-term savings thing. It's not short-term. It's like an investment for 5, 10, 15 years time. Because I'll let you talk about the other shares that we invested in about 9 months ago now.
True. Yeah. Go
on. I always think when you kind of like invest in different things, it's always through a recommendation or through somebody that's heard something or a tip. Very much kind of like gambling, really, isn't it?
Like horse racing.
Like horse racing. Yeah, exactly. Do you know the jockey or the stable boy?
Yeah, exactly.
But this came from a tip that you had, somebody that you know quite well that, is very experienced in investing in stocks and shares, and we invested in an oil and gas company. Is that right?
Yeah, it's an oil and gas company in Aberdeen, which basically Warren Buffett, who's the guru of investments, that he has a shareholding in.
Yeah.
and you kind of, if Warren Buffett's doing it, then we have to do it. Kind of thing. But like the thing for me really is about stocks and shares is that you have absolutely no control over anything that happens. You're literally sitting there kind of, twiddling your fingers and thumbs, waiting for the boom to happen.
Yeah.
But like everything, you've got to be really patient, and it can take years before you really see a massive return or something really to happen, which means that if you're looking to get in and out, unless you're a sniper trader, it's not really kind of a...
Yeah, you got to live and breathe it, haven't you, every day?
Yeah, for me, I don't get excited by it. It's kind of like, unless you see a spike, within a couple of months or a year, it's not something where you can get excited about. And I don't really check it enough. I don't check in every day or have it on an app, whereas I think you may have more of an affinity to that stuff. But I don't. I check my social media stuff, but I don't really check investments and what's going on a daily basis, because that's not the world I've been brought up in. So I think it's tough if you're looking to invest in those things. You've got to be very patient and have an affinity to the company, or have some inside knowledge, and not risk too much of your money in it, like everything in life. But I think there is a kind of a knack to stocks and shares, but I don't like the fact that you're not in control of it, that there's a limited amount of control. You're giving everything to a group of people, a company, which you don't know what will happen, in 6 to 12 months. So it's not something I'm against. I just think it's not something which I'm passionate about and
I agree with you
about. That's all.
For me, it's too much of a slow burner. I think there's other ways that you can make much more money. If something is that slow, personally for me, then it needs to be more secure, because you can deal with it. But I don't like something being that slow and it's still being that risky. A lot of people that will watch this will go, well, if you know what you're doing, then you can manage that risk, and they are absolutely right. So a couple of my friends are stock traders. They live and breathe it. They've got inside knowledge, probably shouldn't say that, but I mean, inside tips and things of what goes on. It's a different world. Yeah. And most people will say that, the best traders in the world, Warren Buffett and people like that deal with this every single day, know exactly what they're doing, and they can predict the market and easily read it. But for, I guess, people like you and me that are literally just looking from an investment point of view, for me, it's a bit of a minefield. It takes too long to come to fruition for me personally. And I think with that level of risk, in terms of not really knowing what I'm doing, I think that there's probably personally better investments that I prefer. Having said that, if I was advised correctly and you were advised correctly, there are companies out there that pay dividends if you own stocks, and that becomes a passive income at the end of every year. Now that is interesting. I can understand that. That's interesting, but I don't have the time to learn about that at the moment. And again, it's something that you need to be in, kind of like, I think more often.
I think if I knew the managing director or finance director of the companies that you're investing in, there would be a bit more kind of an affinity to it, and especially if you knew the vision and where you were going. But if you're investing in Apple or Amazon or all these different companies, it's just it's just a brand. It's just whether or not you think that they've got some interesting kind of new technology or ideas or things that are going to happen in the market for it to kick off.
Should I tell you a funny story? And it's always these stories that you kind of go back and you kind of kick yourself things. Family member of mine, way back when, years ago, somebody came up to him and said, look, I've invested loads and loads of money in this new electric car company, Tesla. They're building a massive factory. I think it's in Las Vegas, in the desert in Las Vegas, maybe. I'm fairly certain. Somebody may correct me if I'm wrong here. And at the time, he had a house in Las Vegas, and he was looking at alternative investments. Like most people do that have excess money, they want to make that excess money work. He said, look, I've invested loads of money in this company called Tesla. Electric cars? No, can't see that kicking off. can't see that doing well. They've built this massive thing in the middle of, Las Vegas or where it is. I'm sure it's there. No, it's not for me. It's not for me. I'm not going to invest in that. And obviously look where it is now. But I think that sometimes when you have that inside knowledge, like you said, someone who knows somebody, it's almost like you feel reassured.
Well, I also think you could, if you're in bed with the right people and you know the right people,
Yeah.
you could manipulate situations to create those peaks and troughs with the financial market.
Yeah.
So if you were friends with certain, I don't know, presidents, prime ministers, officials, banks, you could quite easily make a huge amount of money. But unfortunately, I'm not on first name basis with Biden or Trump or anybody like that.
Rishi, can you just tell me what's going on with the
Yeah,
grain
exactly.
market at
Well,
the moment?
I don't know. Liz Truss, don't get me wrong. I don't know who she was being paid by, but bloody hell, she did a good job in a couple of weeks to completely change the market around.
Yeah.
So yeah.
So, kind of going back, I guess, to the original point and what we were talking about. Don't mind stocks and shares. Don't know enough about them really at the moment for it to be a favoured strategy of mine. Yes, we have invested. Yes, I have invested. But based on my own personal experience, I don't personally, and I know that you don't, put most of your investment money into stocks and shares for the reasons that we've discussed.
So basically, what, 4 out of 10? In terms of your appetite for that type of thing?
Yeah, I'd probably say so. If I had millions and millions of dollars. I was reading something the other day. So the Super Bowl's this weekend. I think it's this weekend, isn't it?
Oh yeah.
Kansas City Chiefs. Their quarterback, I can't think what his name is now. Patrick Mahomes. Right. So earns loads of money. Is on $1 million contracts, but he earns more money from sponsorships and his endorsement deals and his alternative investments. And I don't know if you ever remember. Corrie used to wear like that armband around her arm. And it used to
in the swimming.
No, not swimming. It used to track. Used to track her fitness and her sleep and all of those things. So he invested in that right at the beginning. Somebody went up to him and went, "Have you got a couple of million? I think this company is going to take off." Invested in it, and it's now I think it's like worth 2.3 billion.
Oh wow!
So he invested in that. And he invested in loads of things to do with like drinks and stuff like that. And I found that quite interesting actually, in terms of he had loads of money to burn. Like he invested in Apple and Tesla. If I had millions and millions of dollars, I'd invest in Apple and Tesla because it would make me loads of money. But I don't have loads of money like that at the moment. So I think the only time that I would probably invest in stocks and shares again is if I become a multimillionaire, which it's not going to happen in the immediate future unless I win the lottery, or I knew somebody that could go, "Hannah, you need to invest in this right now. It's really going to take off and I'm really confident and here's the evidence."
Yeah, I agree with you. Okay, so stocks and shares done. Next on the list for me will be crypto.
Yeah, minefield.
What? So I'll tell you about my kind of crypto experience. So I got into crypto very late. So I'm kind of the person that never buys the iPhone when it first comes out. I wait for the next generation and kind of then get involved with stuff. So at the very early stages of crypto, I was never really interested, not really reading up about it. But I guess you probably introduced it to me more than actually anybody else. And we had a strategy of trying to get to a certain target and then cashing out. I think we invested $50,000, something like that. 40,000, 50,000. I think it's $40,000.
I think it's about $40,000 in it. Yeah.
$40,000, right? And the idea was that to get it to 100 and then cash out and then kind of forget about it. And we invested in two things, which was Ethereum and
Bitcoin.
I think we split it in sort of in half. And I think within the first 2 or 3 months, we were up to sort of like
$80,000. Yeah.
$80,000, and I said, "Look, Hannah, let's just cash out now. I don't really want to wait." And you were like, "No, let's get to 100. It's gonna could do this, could do that." And I was like, "Honestly, just you never know. Just cash out now while the going's good." Literally within about a month, it crashed back down to 40,000 again, and we just said, "Let's pull it out." And again, it's one of those things where if you're not in control and you don't really know what you're doing and you don't have a flexible strategy. Yeah. Because look, you can have a fixed target in your head, which is always good, whether it's weight or money you want to earn and things like that. But I guess you have to sort of sometimes know when to pull out of things or get out of a situation. So I think that for me, my intuition was kind of like, 80,000 is still doubling your money. That would have been great.
Yeah.
In the end, we just got our initial sort of capital back, which was fine. But yeah, long term, I think for me, Bitcoin is, and crypto world, if you are investing with somebody who actually understands how that works and is a trader, fair enough, that could be interesting, who works on a daily basis, every second, every minute, every hour, who's a professional in that industry. But as a passive person that's basically lending your money to Bitcoin and Ethereum and all those different coins, for me, again, it feels a bit like a casino, you don't really know what's going to happen. It could be red, it could be black.
I think I'm a big believer in cryptocurrency, and a lot of people are very skeptical of it, and especially people like my nan and granddad. I went just came back from there a couple of days ago, and I tried to explain trading to my granddad, and all he kept saying was scam. To me, that's a scam. It's not for me, Hannah. I was like, I'm not trying to get you to invest. I was like, this isn't a pitch, granddad. I'm not trying to sell you anything. It's a scam. Don't trust it. Not for me. So I'm a big believer in it. I think it's not going anywhere. Yes, it has massively dipped. Yes, it has come back down. No, it's not doing anything at the moment. But I know a lot of people that are making a lot of money from trading it because it is more volatile. And I also know a lot of people at the moment that are banking Bitcoin. So buying it at the price they are at right now and just literally sitting on it. Because with anything, I don't see Bitcoin going anywhere. I don't. It's here to stay. The other coins like Shiba coin and things like that, yes, they're really risky. I wouldn't invest in them. But Ethereum and Bitcoin, they're built on such strong foundations. People may disagree with me here, but I don't see it going anywhere. And like with anything, the housing market, we talk about it all the time. What goes down must come up. It will go up again. It absolutely will. And once it starts going up, people will buy and buy and buy and buy because they want to be part of the craze again. And I think next time it will push through the 75, and I think it will push through the 100k mark. I do believe that. When that's going to come around, I don't know, whether that's a year's time, 2 years' time, but everything comes in cycles. For me, I agree with you. If we're investing in crypto, then I would prefer to give it to a trader that does it on a daily basis and knows what they're doing. So, the other weekend when we went to a trader in Wales, we saw his algorithm for, trading the price of Bitcoin. Great, perfect, simplistic. He was literally doing sniper trades all day, every day, buy, sell, buy, sell, buy, sell, and was making a lot of money from it. That's perfect because he knows what he's doing.
Yeah.
I'd invest in that because I'm investing in him as a person. Me doing it myself, I mean, I tried, don't have the time to do it because you literally have to be watching it like a hawk all the time, for me personally. So I couldn't trade it. In terms of buying it and buying Bitcoin and Ethereum, kind of like stocks and shares for me, if I had more money, I would do it 100%, but I don't at the moment, and I need my alternative investments to make more money quicker for me. That's kind of where I am with cryptocurrency at the moment.
Do you think that people with a lot more money are more interested in things which are just stable and asset backed, and the people that don't necessarily have all the money in the world are ready to risk more and gain more because they're not in that position?
To a certain extent. Yeah, absolutely.
Because I don't know. Obviously, there are a lot of man and woman made kind of multi-millionaires from Bitcoin and all these different kind of virtual currencies, but I don't know all of the traditional kind of people who have been really kind of invested in it, the traditional wholesale people, that the bankers, etc. I think a lot of them are still investing in the things that they know and understand, whereas the younger generations, Generation X, Z, millennials, all those different those people are probably more interested in those types of things because that's a way for them to get involved in stuff quicker, easier, simplistic, less hassle, less bureaucracy and admin.
Do you know what it is for me? And I had a conversation with a couple of my friends a while ago about this, and I stand by this. I think this is a generational change, and I think the reason why people are more interested in crypto and high risk, high profit making kind of strategies are more interested in it is we earn less money compared to how much things cost, right? So
True.
When my mum and dad had their mortgage, they both had a decent wage. Inflation was down. They could pay off their mortgage. Like, you could get mortgages for 20 years, 15 years. Now people get mortgages for 40 years because things cost more. And I think that there's a definite interest in people of my generation of earning extra income, needing to earn extra income. And so that's why, I think that these things are so appealing. And they're appealing for me because I'll be honest with you, I'm like, how can I make more money? I've got 5 hours free today. How can I monetize that? How can I make more money? Whereas I think that maybe people of a different generation, especially my mum and dad, wouldn't even consider this because, putting it into premium bonds or a higher savings account was risky for them. That's their level of risk because I guess they've never had to not find additional money, but do you know what I mean? In terms of like the wage and the mortgage and things like that. So I think it's generational. I think the people of my age and definitely younger than me are more interested in like YouTubing, blogging, vlogging, becoming influencers and everything being digital and how they can monetize that because we don't get paid as much when you look at how much things cost. So I think maybe that's why. And also, and this isn't a dig at people of an older generation, but people of a younger generation are more tech savvy. So understanding these things, like for instance, me trying to set people up, which I know we're going to talk about in a minute, Triumph, but me trying to set people up on Triumph of certain ages is an absolute nightmare at times because they just don't understand the technology behind it.
Yeah. I think the attention span for a lot of people as well is key for that. But I agree with you in terms of all those things. So essentially, we're saying cryptocurrency. What would you give it out of 10 in terms of your interest and love of investing in that type of product?
I love it, but my score a year ago is going to be very different to where I am today. I'd probably say I'm about a 6. Whereas if you would have asked me a year ago, I'd be an 8 or a 9. And that's purely just because I think when you lose money in it, I think you become obviously you learn a lesson, don't you? You become a bit more wise, you tighten your purse strings. Whereas last year, if I had a spare £500, £200, £100, I'd use it and I'd invest in it. Whereas now, I'm investing in something that's a bit more stable that I can see, feel, touch, that's right in front of my eyes. Okay,
so for me, I'd probably be 5 out of 10. I think it is 50-50 in terms of you're going to either lose a ton of money or you're going to make a lot of money.
There's no in between from it. No,
there's no in between for me. It doesn't feel like it's a kind of an up and down, sort of 5-10% here and there. It's literally 100% or 90% down or 90% up. It's one of those types of products. And I think if you really understand the market and follow the market and are into it and kind of can see some trends, you can probably make some good money from it, but I don't have enough time to really look into it.
No, I agree with it. It's a full-time job, and that's why the people that are millionaires with cryptocurrency are millionaires, because it's a full-time job.
There is one coin which we've invested in not so long ago. Do we want to mention that as well?
Yeah, yeah, absolutely. Would I just quickly be able to pause this for 1 second?
No.
Hello.
Why?
Hello.
Oh, hi, Hannah. It's Sarah.
See, this is what happens when you're live recording, is that you get people that just randomly call up when I say put it on air mode.
I left a message. Yeah, 1 o'clock's fine. Yes. Yeah, it's fine. Yep. No, that's fine. It's not a problem.
Basically, the hospital is calling to confirm her operation. I told her to put it on airplane mode.
Yes.
But obviously, she's not listened to me.
No, I didn't. I literally ate just before 9. Yep.
And now we have to find out about all of Hannah's dietary requirements and
That's fine. It's not a problem. I can do that. Okay. All right. No worries. See you soon. Cheers. Thanks.
The moral
Bye-bye.
of the story is
Bye-bye.
Don't book a hospital appointment and do a podcast on the same day.
This is the thing, right? And I'm really sorry about that, but this is one thing that annoys me. When you leave someone a voicemail and you tell them you're coming and then they just don't look. I'm going to apologise about that, but I just had to confirm that. And basically, I've drunk and eaten too late as well.
Oh, really?
Yeah, so obviously they moved it back, didn't they? So I'm about an hour behind. But look, it is what it is. Going back to, interrupting there, I'm sure Joe might edit this because I don't think it's good podcast material talking about what I ate for breakfast. But going back to what you're saying, there was a coin you were saying.
Yeah, that we've invested in recently. A coin which is, see, I'm not as savvy about this stuff, but I know one of the coins is listed on the kind of exchange, which is PLC Classic.
Yeah.
But we've invested in one of their kind of sister coins or brother coins, or whatever you want to call it, which is PLC Ultima.
Yeah.
Be honest and transparent here, I haven't got a freaking clue how it's going to go. However, into month 2, and the profits are in our wallet and have been distributed, and it's looking good for month 1. A lot of these products, this is the problem, is that they have these coins which then have farms, which essentially kind of generate kind of an extra income from that coin. I'm not going to go into great detail about it because I honestly don't know the ins and outs of that type of process. But essentially, you buy into a coin, they then generate. They say they're generating X amount of money for you because you're investing in it, and then you're paid out a certain amount of profit over a period of 12 months or 24 months, depending on your contract, which sounds great. Don't know whether these things are really existing, or if they're Ponzi schemes, or if they're kind of actually genuine. But like with most things, you hope for the best and prepare for the worst. And if you're an adult, if you're over the age of 18, if you are sober, if you're not taking drugs and medication, you have to be brave and understand that there are risks to everything you do in life.
Yeah, massively.
And so we've invested safely and wisely, but understand that this is a higher risk thing. So it could blow up in a really good way, but it could blow up completely in an opposite direction. So every month we are distributing those money back out.
Yeah.
Taking the money back out just to make sure that we're protected, but
mitigating our risk, aren't we?
We're only month 2, but that's something we've invested in. At the moment, I'm going to say it's great because it's been, sort of performed so far.
Yeah.
But I think after month 6, 9, 12, we'll get to a stage and understand whether or not this is real, and if it exists, and if this is just a complete scam, or if it's the real deal. So
yeah, I agree with you.
That's the other thing that we've done. The other thing you hinted on a moment ago was something we invested in probably about 18 months ago now. No, actually, no.
No. It was literally just over a year. So you probably 13. Yeah, about 13 months ago, January 2022.
Yeah, and it was through a contact of ours who didn't really want to tell us much about this, product because. Like anything, you don't want to be the person that's recommended something, especially in the financial world. It's a very, very difficult thing to talk about. So we got introduced to it, and essentially it's a managed fund which is based abroad in Cyprus, has some affiliations with some of the Far East as well. And it was to do with CFDs, which is contract for differences, so trading the differences in prices for different commodities like oil, gold, currency, etc. And they have obviously a platform which then is regulated with, it used to be regulated in the UK as well, but now because of Brexit is now not regulated in the UK, but it's regulated in Europe and a lot of the world, and has certain licenses. And they have essentially brokers that come to them and register on their platform, go through a trading kind of like protocol over a 6-month period, test their money, see whether they actually deliver on what they promise, and then they offer returns between 5 to 7% a month. Me being me, I don't believe it, think it's a complete scam. I'm a bit like your granddad.
Literally.
Don't believe it. 5 to 7% a month, that's crazy money, it's not going to happen. Again, it's difficult to talk about things when it's on one hand it's only been 12 months or 13 months. On the other hand, it still feels like a long time, and you can only judge things based on your experience. Like with a mobile phone operator, like with computers or whatever it is, you've got your own personal experience with it. And I'd say that we've invested relatively heavily over the period of time because we saw the growth and saw everything kind of working. But then obviously management made a decision which we were aware of, but we didn't really kind of think it was a good idea. But they introduced a coin which was linked to the fund, which essentially has made things, for the moment, not necessarily as attractive as it was before.
Unless you're a new investor.
Unless you're a new investor, it's absolutely fantastic. But look, that's something which hopefully over the next 6 to 12 months will be a very interesting investment. And if it does, if the coin does increase in value, the managed fund will become a lot more of a probably income generating
absolutely, yeah,
asset for us, and making some very healthy returns. So look, that's something else which we've invested in, which, don't know if you want to share your thoughts on that, what you thought about it or what you currently think.
What do I currently... I really liked it. A lot of my family have invested in it as well, because they like the fact that you have your own account, you can see the returns. Has my opinion...
Yeah, very transparent.
Yeah, it's very transparent. There's webinars, there's big community behind it, which, it makes you feel nice about things because you don't feel like you're on your own and you can't speak to someone. Yeah. There's always answers and things that you can find, and we've created our own community around it, which I think's actually been quite helpful for people, and got a good group of people on there. Ultimately, in terms of what I think of the product, I see why the company has done what they've done, because they've got issues with getting funds out on a day-to-day basis, in terms of they can only do 10 million a day, which is not a lot of money when you're dealing with 10 billion over the whole course of the company. So I understand that. But I think that potentially they've kind of gone, right, fuck it, let's just do it. And they haven't run all the different scenarios that could have happened. And what's happened is one of those scenarios where the coin has dropped in value. It's not a $1 ratio, which is essentially, everybody that was pre-invested in it, it's devalued their investment straight away by them not really doing anything. Now that can be overcome, and it is being overcome, but it's just an annoyance more than anything. So when you talked about it's a great time for new investors to get in, it's a fantastic time for new investors to get in. And if you and I were multi-millionaires, I'd be going, let's shove some money in there because we can make a percentage on the coin when it goes up. But my overall kind of thought process on it is, I'm not panicking. I'm not worried about it. I'm compounding. Like I said to you, I'll see how it is in 12 months. In 12 months, we get our money back and a bit more profit. If the coin goes up even more in value, then great, we make even more profit. It is what it is. You can't control that. And I think that was part of the element that annoyed me a little bit about it, is that we didn't control them turning things into a coin. We were just a bystander. Which was a bit annoying. But then I think back to, everything that we always talk about. If you invest your money in anything, there is always a risk. That's it. Whether you're investing in, I don't know, let's say premium bonds, or, premium bonds is very low risk. But I'm just saying in general, it's an investment. You are giving someone else your money to invest. Yes, you can mitigate that risk, but I think we were both very much aware that when we found out that you can make, you said 5 to 7%. I mean, on one of the funds, we're making around between 10 to 12% per month. That there's a caveat in there. There's a risk, right? So
yeah, but still in the back of your mind with these investments, you're thinking, how are they actually making this work? Yeah. Where is this money being generated from? Even though kind of conceptually you do understand it, you can fathom it in your brain, but still you're thinking, well, how is it so consistent? How are they sort of really being able to pay that, and can they pay it over more than say 12 months or 24 months? And I think in general, like, moral of the story is that companies can change direction, which may or may not suit your kind of personal circumstances. A lot of people used this particular fund to generate kind of a cash flow for themselves every month, which really has now kind of put them in a bit of a predicament.
Bit them in the arse.
Whereas other people did it, just they had a bit of extra cash and put it in there and seeing how it grows. And I think those people that are looking for long-term sort of investments are still absolutely fine with things. The people that were a bit more speculative and needed that cash now, are really kind of a bit stuck for the next 3, 6, 9 months, whatever.
Yeah, I agree with you.
So I guess I think like with every single investment, they may look attractive on the surface, but there's going to be risks associated with them.
Yeah.
You just need to make sure that you've got your objectives aligned with what they're kind of doing in their kind of their minds and their vision, because it may not fit with your kind of expectations.
Well, I guess, it's the old adage, isn't it? Only invest what you're prepared to lose. I don't think anyone's prepared to lose money. Let's face it, if I'm prepared to invest that, but if I lost it, it'd really annoy me. But
yeah, of course.
I think that with something that's like this, which is higher risk, you kind of have to have that in the back of your mindset. Going back to kind of what we've been talking about, where I see this kind of out of 10. For me, I again, it's changed probably since they've obviously made the change with the coin. I would have been at like an 8 to 9 out of 10. I'm probably around about a 7.
Oh, do you know what? My mark out of 10 was a 7 as well.
Was it? See, great minds.
Yeah, I think it's more of a case of I see this as a bit more of a controlled risk, because there are professionals involved in this that are looking after it. There's transparency. You can see what's happening.
You can go to their offices, can't you?
Yeah, you can, that sort of thing. So there's still an element of control there. It feels like there is anyway, even though technically on a day-to-day basis I'm not involved. But it still feels like there's a kind of the reins are there on the horse, going back to that analogy of the Grand National again. So yeah, for me it's a bit more of a controlled risk. So that's managed funds.
Yep.
And that's for CFDs. That's one we've been involved in. I guess we could talk about property, because it's not really an alternative investment, but I guess a lot of people that we probably speak to on a day-to-day basis are interested in this, and they look at alternative investments via higher risk strategies like service accommodation and I don't know, option agreements and things like that. Do you think it's worth mentioning a few of those, just to sort of very briefly touch on them?
Happy to briefly touch on them. Like option agreements, like you said, is something that we are doing more and more, and something that we feel quite comfortable with, that we use on a daily basis. But ultimately, it's pretty high risk strategy if you haven't mitigated your risk in terms of doing your research beforehand, because ultimately, if you don't get planning, you lose all of that investment that you've used on surveys,
to be honest,
everything.
Let's just clarify what we mean. So option agreements for land or buildings where you can then essentially put planning in place to achieve a higher value for it and then purchase it at a later date. That's what we're talking about. Okay. Yeah, I mean, for me, it's something where you can look at a plot of land, and I'm looking at something tomorrow, actually putting an offer in tomorrow for a piece of land that's worth £1.5 million, where the upfront investment will be probably between, say, 50 to 100,000 to achieve planning over a 12-month period. But then once that's achieved, or going through that process, the value of the land, if you are able to transform it into something else, could be already 2, 3, 4 million.
Yeah.
So it's just the kind of the risk of 50,000 and turning it into potentially, a £500,000, £1 million gain. The risk is obviously 10, 15, 20 times more than your initial investment, but there is a risk as well that
massive
you will
risk.
lose everything.
Yeah, massive risk.
So in a way, it kind of, for me, it feels more like a controlled game of casino, or going to the casino, rather than just throwing your money into the wind and seeing what happens, really.
Yeah.
Or more like a red or black scenario, but with a bit more control than that.
Yeah, it's interesting because somebody like you that is quite risk averse, very in terms of like got your head screwed on, you like to analyse everything. You love option agreements, and they're probably the most riskiest strategy out of the property world. Well, in a way, when you look at it.
Do you know what though? But do you know why? It's because the risk I'm taking, because it's all about my intellectual kind of knowledge.
You can control that.
I can control it. So obviously you've got to deal with the councils and planning departments, etc. But it's just more of a case of, if I can see the vision of this and how this piece of land could be transformed, and I can piece it all together and get all of the sort of, those elements together, and have done the relevant homework and surveys. It's a bit like working in a big business and getting the legal department, the accounting department, finance department, marketing department all together and going, look, we need to put a company strategy together where we're not spending too much money, but we're kind of pushing the boundaries. And it's basically trying to get groups of people together to say, do you share this vision, and this is where we're going, and do you believe in it, and can we do it? And I think that's why I like it, is because that's what I've done in all my life in big businesses.
Absolutely. No, I get what you mean. It's like a level of control, isn't it? That's essentially what it is, and being able to control all the different avenues that come in.
I'm not a control freak, but I do like to be in control, especially if you're spending money on things. You need to have an element of control over things.
Absolutely, especially if it's private finance. You have to. True. You have to be. Yeah. You have to be on it all the time, because ultimately it's not someone else's money. It's money that you're using together, but you're being entrusted with it. So yeah, no, absolutely. What was the other one you wanted to talk about in property? Was there another one?
Well, look, we don't have to talk about sort of buy-to-lets and flips and things like that, because they're not really alternative.
No, they're not for
investments. We probably could do passive investments, because a lot of people these days, and I can see a trend happening in the world at the moment. So this is here where, listen to where I'm going with this.
Okay.
So a lot of landlords who have had massive portfolios for 20 or 30 years, they completely hate tenants. They hate paying estate agencies. They hate doing all of the maintenance.
Yeah.
And they're being screwed by the government because of
tax,
corporation tax, income tax, and the way it's all treated now. So they're thinking, well, if I go and invest with these guys, for example, and I'm getting X percentage, I don't have to deal with the tenants. I don't have to deal with the estate agencies. I don't have to deal with all of this stuff anymore, and it's completely passive. Why on earth would I then buy a property? I may as well actually invest in a company that's buying assets and have some form of control and security, but actually not have any relationship with any of it. As long as that company is ethical, moral, has got the right accreditations, the right kind of governance around it, that could be a much better way to invest my money than actually getting involved personally with stuff. Because we talk about this active versus passive stuff a lot.
Yeah.
And if you've been an active investor for 10, 20, 30 years, you actually may not want to be that active anymore. And we see a lot of tired people that have been, managing properties themselves, travelling hours up and down the countries to go and fix toilets and bathrooms, and dealing with evicting dickheads that have been not paying the rent, etc. So I think a lot of people now are looking for an alternative investment in terms of investing in companies or people or products whereby they have no involvement, have some form of either a fixed return or a joint venture partnership whereby they go, well, look, if I can give you the money for 12, 24, 36 months, I'm good.
Yeah.
But the backside to that really is that there are, like we talked about last week, a lot of sharks in the industry. So you need to make sure that you're in bed with the right people. So I would say that if and when I get to that stage, that's exactly what I will do. I do not really want to be dealing with all of the hassle on a day-to-day basis.
I want to be making money in my sleep.
Well, in hospital, probably in a couple of hours.
Yeah, literally.
You'll be hopefully making some money as well. But yeah, no, so that's another one, which is, I guess, an alternative passive form of investing, which a lot of people are looking at now.
Yeah.
And I think people are saying, look, do you know what? There's all these strategies. I don't know anything about,
property,
serviced accommodation, buy-to-let, flips. I don't know what the market is doing. I haven't really got the time to do it. I'm working up in the city or I'm working abroad. I've got this amount of money. This is what I want to do. Can you just make it work for me? And I think, honestly, that's a really simplistic way of looking at things, because I can't be a plumber. I can't be, Formula One driver or whatever.
Yeah.
You have to get other people to sometimes interview those jobs for you to be able to then do what you do best.
I just think, like, I put a Facebook post about this a couple of months ago. with inflation and things, and I use it. I'll use a really simplistic example. 100 grand, inflation is at 11% at the time, I think, when I was doing this, and you're being offered, I think the highest savings account was 4%. So you'll make 4 grand over the space of 12 months. But if inflation stays at 11%, you're losing £11,000. So take the 4 grand that you've made and the 11,000, then you're left with 7. Is that 7? Yeah, you're left with £7,000. You're worse off by £7,000 by sticking your money in a bank because of the price of cost of living and how much things cost. So for me, it's a no-brainer. If I had 100 grand, would I stick it in the bank to lose £7,000 because it's in the bank? No, I would not. Would I invest with a company that is going to guarantee me 10% return on my 100 grand? Yeah, I would. Or 15%, or one of those things. Yeah, I would. So, and particularly with property, and like you said with assets, it's the oldest investment in the world, pretty much, buying property and investing, because you know it's always going to go up and it always holds value, like gold. Really, it's a stable investment over time. So, yeah, no, I agree with you. I think it's definitely a trend that's coming into place because, in the nicest possible way, people are getting absolutely smashed on interest rates, smashed on inflation. And like I said earlier, I guess I said to you earlier about younger people looking for kind of more like, not get rich quick schemes, but, you know, alternative investments. I'm finding that a lot of older people are looking at this strategy, particularly with us, because they don't want to leave their money in the bank, and they're happy with that because they get the backing of an asset.
Well, I guess for me, I'll wrap the sort of property part up. I'd say the option agreement's probably an 8 out of 10 in terms of the risk reward for me personally, because I think there's a lot of risk, but I think there's a lot of reward in there. And although it is kind of a 50-50 where the things work out sometimes, I do think that there's still an element of control because you can purchase an asset at the end of it. There's not just, and there's an end game to what you're doing. And then with passive investments, personally, if I had X amount of millions in the bank, that's exactly what I'd be doing. I'd be doing it with property-backed stuff.
Yeah, agree.
To essentially give it to people who are, you know, professionals doing that, and make a return from that money. Because if you think about it, if you've got 500,000 or $1 million in the bank, you know, whether that's 7, 8, 10%, it's a lot of money a year that you can get just as passively, and that could be used as your, I don't know, pension fund.
Yeah, absolutely.
Wait, I don't know, for your partner to go out and play golf or go touring around the world or whatever they want to do. So I think it's one of those things where people don't always think about that, and it's hard to find those people to work with on. But if you do, it could be really interesting. So
I agree.
I'd say that would be a 9 out of 10, but providing you find the right people to do it with.
No, I'd agree with your scoring there. Maybe a 7.5 on the option. But I agree, a 9 out of 10 on the other one.
Yeah. I think it's because you don't like the detail and the option stuff. I prefer the detail stuff.
I like it when it gets to planning stage.
Fair enough. The last thing I want to mention, because we'll wrap up now in a second, is we're kind of creating our own cocktail of all of these things. Yeah. So we've been looking into how we can utilize all of these different things in a way which could we create a product a bit like, I don't know, a decent cocktail like a Sex on the Beach or a mojito or something like that, where you take all of the elements of things and put it into a glass and makes it, you know, the best drink ever. Yeah. And a lot of people are interested in this crypto, you know, Forex trading world, but they don't really want the risk because there's no, it's liquid, it's hot air really. You're not actually owning anything. But there are people that just like the security of the assets, and trying to kind of put together those two things whereby you've got security, but you are flirting a little bit with that foreign exchange or investment world that people do want to know more about. And I think a lot of people have gone through that sort of heartache with losing money, making money, getting the ups and downs, and they just want the security, but knowing kind of it's pushing it as far as it can do within the two worlds. Yeah. So we've been in discussions with an FCA regulated fund based in the UK who actually deal in Forex, in terms of they trade Forex, and everything is based in the UK. You can feel, sniff, touch people in the UK.
Go to the offices.
And go to the office. So that's something which was really interesting for us, because a lot of these products, that you invest in, you don't actually get to meet the people.
No.
You don't know who these people are. It's nice to actually shake the hands, see people, live,
Yep.
And get to know them. And obviously the Forex part of things is quite risky, but they are offering quite solid returns. But we wanted to combine a product of offering asset-backed property strategies combined with a little bit of Forex, which then could create a very powerful product, which hasn't really been seen in the market, I don't think. Or, look, I don't know, maybe it does exist, but from what I've seen, I've not seen it really kind of from the people I've spoken to. And essentially it would be investing in products whereby that you've got a certain percentage of your money which is hedged against property and assets, but a certain percentage would be utilised for
trade.
The Forex trading with FCA regulated brokers, etc. So that's something which I think we'll have to do a separate
it needs a separate podcast, because it's so interesting and it's so cool and different. Like you said, it combines, I guess, my love of trading with your love of asset-backed types of investment schemes. And I think that, like we said, if it's something that we're developing at the moment and you're working really closely on, if it's a product that we can provide to people whereby they make money through trading and they make money in terms of having something that's asset-backed and that form of protection, and the FCA regulation in terms of the trading, for me, that's probably it's exciting, because
look, as an investor, we're both investors, right? You want to have FCA regulation, tick.
Yeah.
You want to have asset backed, tick. You want to be trying to make as much money from the best of both worlds, tick. Yep. It's UK based, tick. Can you meet the people? Yes. So all of the things which you would expect and want from a product. I guess it could be really, really powerful. And I'm honestly really excited, and I'm hoping that, providing all of the licenses, all of the kind of relevant accreditations and things are going to be in place, I think it's a bit of a game changer for the industry as well as us, because people are looking for stable, secure, but quirky investment. Well, I say quirky, that's not the right word. They're looking for alternative investments whereby there's enough money to be made to make it interesting for them, but believable and secure to make it kind of sustainable.
Yeah.
And I think that's the cocktail which I'm hoping we can make, so that it then protects people. Because at the end of the day, you want to protect people as much as you can, and there's only so much you can do. And I think that people, if they see FCA, they see all of these accreditations and
assets,
people and their assets and everything behind it, it just makes it much more secure.
I agree with you. I absolutely agree with you.
Massively excited about it.
I can tell you're smiling. I'm joking.
I smile on these I look like a China doll most of the time smiling on this podcast, sort of like looking grinning or whatever, like a Cheshire cat.
No, you're fine. But we should definitely do a separate podcast about that, because that is something that and maybe we can get some of the guys involved in it that are on it as well to explain it and explain about it, because that could be, I just think, really powerful, really interesting for people that are genuinely interested in alternative investments. And obviously we've talked about loads of different ones today that we're involved in and that we do. Anyone that's listening, if not that we can give financial advice, as Gwyn said, and we won't give financial advice, but if you wanted more information about kind of what we're doing, we're happy to talk about it further. It's not a problem.
Just to be open and honest about our experiences, that's all.
But I was going to say also, anybody that's listening, if you're in any alternative investments at the moment, we always like to listen to what other people are doing and do our own research. So, please suggest anything that you're doing, because we're always interested in stuff.
Exactly. Well, look, Hannah, have a successful operation this afternoon.
Yeah, thanks.
If we don't see you next week, we know where you are.
Yeah, thanks for that.
I'm joking. It's all going to go smoothly.
Yeah, it'll be all good.
And we'll see you a bit later. And thanks everybody for listening, and we'll see you next week.
Bye, guys.